higher than you've ever been. You've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. That's short just after the live though. Booyah! That got paid for being patient. So let's go into the charts, shall we? Bada bing, bada boom! Here we go. So, talk about having the levels set. So we talked about holding that 706 region, and right there at the 236 for that trend-based bearish fib extension level, we broke beneath it and boom, dropped to the next level on this diagonal fib, the 0.65, and took profits on our short. So we realized $288 and have a 25% runner in profit, stops into profit. It is a win. So that weekend trade of ups and downs paid off for being patient. So where do we go from here? That's all fine and dandy. Do we continue down to this 25k region and take out the sell side liquidity of these 41 days of traders or not? Let's go into the heat map. This is where people leave their liquidity in the charts to be burnt to a crisp by the market maker for not using a stop loss. And let's see who got crispy today. Let's run a fresh one here and see how you all are doing in the live chat. Oh yeah, the screen is quite large now. So I'm seeing a new name here, Low Mips. What's up, Low Mips? All right, so as above, so below. You got the bubbles popped as they stacked down here. We went over that to a T. They came to those levels we talked about. 2847 bubbles are now off the table and repossessed by the market maker.
Fatality.
Yes, so those people are now gone, and you are seeing some longs stack themselves up over here. However, the value in which the pools are playing out here is showing larger pools of shorts being opened by the 194 million here and 227 million here, 208 million there, 208 million here, 208 million there, as opposed to the 100 below. So are we spawning the divergence here off the stacked liquidity for that double bottom to come up into these bubbles up above now? This is what you would consider a fair value gap retracement. What is a retracement? Well, you retrace back into the previous dropped impulse region to knock out some of those traders that are in the right that refuse to pay themselves. This is why I locked in my gains to reassess. So if it comes back to my entry and knocks out the runner, it's a win-win. This is why you punch and shield, trim and shield your entry. That is one of the tenets I've learned the hard way. If you don't do that, then it will possibly come back to your entry and beyond, and you'll be scratching your head, why didn't I pay myself? So that's why you reward good behavior like that and continue unscathed into the future. So are they going to come up to this region? Well, this is a mighty big bubble to take, but this is a low time frame. This is the minute time frame of High Block. What is High Block Capital? Well, it is a subscription service, so please consider subscribing to this channel and liking if you like what you're seeing for free, because it does cost money to have this subscription. Let's go to the higher time frame real quick. We are limited on time. I want to try to be out of here by 10 so I can get ready for scalping the Nasdaq with my compatriots in trading on the 10 second, which is much livelier than crypto and more exciting. Skip the 12-hour, let's go right to the 7-day. Okay, so we took out the liquidity below, 5 billion off the charts alongside all this stacked liquidity, probably about 10 billion or plus. So are we going to see this retrace down further or start making our way up to the 30K region? That is the question. On this current 7-day time frame, the imbalance has been cleared, and now there is possibly a justification to go to 30K. However, if you compare 26 and 26.9, this region and the 30K region is now even Steven, so they could induce some more to make that journey continue lower. On the 7-day, it is ambiguously even. Let's go to the monthly. The monthly time frame now has, how is it getting thick up here? Has it changed at all? Went up by 1 billion since the drop on the 30th. So not so stacked just yet. However, you are getting this stacked region up to the 34K region. When I saw this surge up 2 live streams ago, I was a bit concerned that they would just gap up and take all this, but now that they've come back down to this region, it is anyone's fair game if they decide to go down further. The immediate, if we just look at the immediate zone we are in and look at what's above, as what is below, there is about 8 billion down below here as opposed to the few billions, unless we inverse Bart Simpson back up to start to make a journey up here for Tuesday, Wednesday's narrative. I would say there is a slight imbalance to take out the upside here, then the downside just off of my eyeball here. I'm not going to go through all of the amounts in value. Right here you see this 16 billion plus is in yellow, and I see one of those down here, but I see more yellow up here, which suggests that it's getting stacked up above now. Let's go to the 3 month. This is why I started to question whether I should leave the short open or not. As we step into the 3 month and above, you start to see this heat generated to the downside. At 25k you get 100 billion, and at 22k you get over 100 billion at those regions, and the entire journey down there is caked up with double-digit liquidity in the billions. So that imbalance is clearly to the downside here. So are we going to start making lower lows and take out those sell side liquidity regions we talked about here, with the 41 days of traders being long and going to take out their stops, being a narrative for this trend-based bearish fib extension level, which we've now seen honor the 236. So the journey has begun. Are we heading to the 65 and the 706 and the 786 as we make our journey there, or are we going to see this bounce up and out of here, up and at 'em? Let's continue our inspection of the time frames as we expand our vision to the 6 month. Would you mind turning down the music down a bit? I'd have to do that after the stream because it does not, it would take me out of the flow state to do that now. I generally adjust them and listen to them afterwards, so you might have to turn up your volume or whatever you're listening on. So, if we look at the pools below, also extremely stacked beneath here, are we going to go into these liquidity pools at some point? Particularly 22.5 is looking juicy. They got $87 billion down there, and the entire journey down to it is just looking right for the picking. The narrative structure building to 34k is also there in double digits, starting to get thick at 32.7, 50 billion plus, and the other journeys down here also 32 billion at 30,300. So this journey to the upside is not out of the question either, which is interesting to note. So if the bullish narrative is on and they are deciding not to hit these guys for whatever reason, then you could continue higher with all the bank foreclosures. First Republic Bank, I don't pay attention to the names, but that bank getting repossessed by the government today, and Silicon Valley Bank, all these banks foreclosures might be giving fiat a run for its money, pardon the pun. So people could be running into crypto, which would cause these 19.5K characters to be nicely padded on their journey to the upside. And so with that path of shorts being paved with 100 billion up at 33.2 on the yearly time frame and nearly 100 billion at 32.8, could we see this surge up to these regions at some point? The narrative structure is there to 34.8. So we got 100 billion there, and it starts to taper to 47 after that point. But the 34.8 is definitely not off the table. You have this short pool from June of last year that is now up to nearly 100 billion. So the 77 billion that was opened here on June 8th, 2022 is still in the trade. Maybe not the same characters, but the pools have exchanged to the same level and has increased by 20 billion. So those guys are regretting not paying themselves for sure down here. Okay, so let's go into the fib levels and to see where the probability is on the indicators. Time is limited and of the essence, so let's get to it. So we're going to get out of this diagonal fib on the Coinbase chart, go to the Binance chart where we have the fibs laid out for you in both directions. We got rejected off the bullish fib levels, and we also bounced off that 236 of the bullish level. How did I get the bullish level? I was conservative this time. I took the impulse to the upside and this retrace to the downside, and that gives you the 236 here. Where was that? And we held that region. So we're currently beneath a daily, if it will load properly, thank you, a daily support with multiple touches, and this is also resistance. So are we attempting to SR flip this resistance level for good? We previously broke through it and came back and tried to hold this, but we are currently beneath it. Until we can get above this level, then this could become resistance to the downside. Okay, so the fib levels I'm not going to change for now. You got your bullish zones and your bearish zones. Where to look if we would find these bounces. If we break this 236, then this bullish narrative is negated, just as this 236 was negated when we came up here, but then the bearish projection is on as soon as we go beneath this 236 level. Okay, time to turn on the heads up display. Let's just get down to brass tacks of Momentum Master. This is the indicator. Link in the description, momentummaster.info for more information. You can scroll down to the features, click the tab, turn on all of the components in their glory and see what they look like, or look at them individually. Each component will show you what it means with a written blurb about it. We won't get into it here, but you may hear us talk about it, so you can read more in detail at that time. Okay. So we already did an intense breakdown of the higher time frames on the previous stream. You can go check that out if you want to see how the monthly, the 3-day, the 5-day, and the daily all break down on discount versus premium, and why we entered a short here and not a long. Just off the idea of premium alone, you don't long resistance. You kind of think about the idea of shorting resistance. It's a smarter play to take, so that's why we took it. But we could make another tap to resistance, so there's always another entry, an option to take. So let's look at that higher time frame now. We'll start with the 22, because I like the 22 hour and the unsyncopated rhythm of it, which we back tested to be true. All right, so currently you're getting this. Whoa, let me close this out. This is for my other time. So currently we're breaking beneath the cloud here, and until 9 hours from now when this candle closes, do we see this cloud get torn beneath? If so, then you would see yourself going further down. If we close beneath this cloud and we come back and we retest it, you could be heading in that downside direction. Whereas a similar case where we broke down beneath the cloud and closed beneath the cloud was here on the 22-hour time frame. We broke beneath the cloud, closed beneath it, we bearishly retest, kind of came up above, but couldn't muster the power 2 or 3 times in a row, and that was all she wrote before we went to the downside. So this is what you would look for clouds. In this case, the cloud is purple, so it's in a kind of offloading distribution state, even though we went up here. That's kind of interesting to note. Who are the players getting out there? What is the volume leaving for? And let's take a look and see if there's anything else. So you see how this opened up, and the money flow is currently above the RSI. When that happens, it tends to come down to the RSI. So I'm liking what I'm seeing in terms of my runner being in a safe spot, because this could come down, the money flow could come down to the RSI here and just let out the floodgate down here. And the Williams is kind of not in an overbought status, but not in the best position to long right yet. I'd want to see it come down to this green zone before I consider that. And then you'd look for those divergence, just similar to here, how the money flow went beneath the RSI and we got that bullish divergence and then hidden bullish divergence, and we came back in. Here you're getting the money flow above the RSI and the RSI is fading, so you can expect this to kind of come down some more on this time frame. Let's go to the 12-hour. 12 hour also previously holding a fading cloud. It went up and got that shooting star sell-off wick, and that shooting star concluded with a drop to the downside. Are we going to come back and bearishly retest this cloud? It coincides with eating the fair value gap of these bubbles to some degree, taking out the 50x 208 million pool at 2891 would be a wise decision if I were a market maker, and I would come back and eat those guys for over leveraging themselves and trying to cut the queue to get to profit. It's just that simple. We have a 5x thing open and still getting a decent amount in our profit, so it doesn't really matter what leverage size you use. You should use with frugal amounts of money that you have, and don't cut the queue or you will get burned to a crisp. Or know what you're doing, like Jason Casper, who can snipe those levels like a boss. Alright, so let's go to the 6 hour. 6 hour opening up the Williams here. This is like, it looks like a duckbill platypus, but when this duck beak opens, it kind of vomits out its momentum onto you and could suppress the 6 hour here, similar to what it did here. So the 6 hour came down just in a similar fashion. The duckbill platypus had its mouth open here, and it just dumped all over while the 6 hour just stayed pinned. So could we see that same thing occur? It's happened before and it will happen again. Will it happen this time? I don't know. But this is how you backtest, and this is why we put these backtestable alarms on our indicator, because you can see what happened in the past very easily without having to hunt for it. And going to the 4 hour. 4 hour is having that suppression that's already playing out. You had the attempt to come out here and the Williams said no, 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 rejected it and dumped down onto it. Now you're getting into the green region, but this is the last vestiges of that sell-off. So when you see this come down in such a fashion down here and round out, that's where you get that rising sun. And that rising sun with the baselines in effect is your nice smooth entry for thinking about profit for a long. Although we did have that liquidity grab, and we put that out on the live as well, where we talked about that 30 billion getting knocked off, and it spawned that divergence to the upside. So are we going to continue further down here to get some more divergence cooking is the question. Let's go to the hourly. It looks like the 15-minute is overbought before I look there, thanks to the screener on the screen. We're getting the cross up event on the hourly time frame. The money flow is starting to come back in. The MACD came down to the Williams. The Williams is in a good place. The hourly looks like it's good to see that bounce to that pool we talked about at that there's a 100x pool up at 291395 that they could come back to take as well. So that hourly play could come to eat 50% of the vector candle, get rejected off the adaptive moving average and the weighted here, or the cloud itself. So we could see some sort of bounce up to here and rejection off the liquidity. How far up is that going to be? This is a fair value gap. The fair value gaps simply represent these open bubbles without having access to see the open bubbles. And so you can use those theories to see what we are seeing behind the curtain here. So are we going to come back to these regions, get rejected and continue lower? That's generally what it does. If it comes to a thick cloud, it gets resistance on the cloud. You also have an ATR possibility of resistance. You have resistance, 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 resistance. 4 levels of dynamic resistance to break through on the hourly time frame, even though you're already starting to see the hourly play out, even though we've gone nothing but sideways. So what you want to look for is this hourly cross. Sometimes you do have these meanderings around when you have the higher time frame suppressing you, as we went over the 4 and the 6 hour cross down event, which we will do very briefly to show you. We had the 4 hour cross down event here, and we said as long as the candles close beneath the baseline, we are still in the short, and that's the way the cookie crumbled. And it cascaded to the 6, and we said that too. And the only time we were worried was when it was up here, and we said we'll see how this candle closes. It closed down here and immediately started to dump down, so I took a sigh of relief as it went beneath this baseline. So the baselines are your first sign of reversal. You can read about them on the website for more info. So are we getting that bounce off the cloud here on the 6 hour? We're kind of into the cloud a bit of a ways, so we'd have to come up out of it for my liking. Let's go to the 15-minute really quick. So the 15-minute cloud has staved off that dump fever of the darkness of the dumpiness of the cloud, and we're starting to reclaim it and get above here. So I like what I'm seeing for the 15-minute for a long, although you are getting overbought, but you could get that pinned baton pass to the higher time frame of the hourly. The hourly is attempting to play out here. If the hourly closes in the next 5 minutes and locks in this crossover event, you could see an attempt at some sort of rise to the upside to one of the levels of resistance, which would be one of these guys here. I'm gonna put the 100x on the chopping block. Let's say 29,139. So let's go 29,139 and mark that off. 29,139. Okay, let's just do 140 to make it even. So that brings us right up to the cloud. Do we see ourselves go right up to the cloud and get rejected off it and try to confirm that support for a narrative shift into the Tuesday, Wednesday play for the week? I don't know. But we do have the 4 hour and the 6 hour on our side. Once again, the 6 hour momentum is the Williams is just getting started by the looks of it, so I'm not necessarily longing. I'm eyeballing with my runner intact. So that's about it for me. I don't really have anything more to give. We have about 30 minutes for the NASDAQ open. Let's go ahead and look at the NASDAQ and so we had a lot of tech companies give their earnings last week, which is why you saw this surge over the last few days. We had this bearish projection that we came back to. They came back into this pool, and now we're coming back into the outskirts of the daily cloud here, and we're getting nukes for a chill out kind of potential baseline cross down event here too. So are we starting to see the Monday retrace idea of that rise? I was looking at this earlier, these levels that we touched at during the Asian session. Actually, I believe those up for later. So let's go to the S&P. So the S&P did get a bounce off of the order blocks that we were putting out here. I don't remember when we had those out, but they bounced off them. The fair value gaps from back here, which was the 706 region of the bullish trend-based fib extension level. So we're now approaching the 1382 of that trend-based fib extension level. This is where you would possibly see some chill out distribution event of some kind at 4180, and you're getting overbought on the 4 hour, the hourly, the 15 and the 5, so you're getting overbought on all these time frames. The daily time frame is still good to go. The 3-day and the weekly is not on your side. So we saw that nice 6 time frame bounce out of here on Thursday. And I believe we are down a liquidity pool of London today. I might be mistaken, but I heard something about them on a national holiday or something. So we might see an irregular lack of volatility, but New York does bring the Fury most times, so we should still see something. Let's go see what the futures has us doing. So the futures had us already reach that and possibly come back down to equilibrium, so we did tap that region. That played out. That was weird. Alright, so we're starting to get that resistance level. That looks like a daily time frame one based off the color there. So we are reaching that kind of resistance point here on the daily time frame. If we break above that, we have some other range high sell side, buy side liquidity to tap into. So you could go above this for a stop hunt before you come down. So you could see this coming up slightly above what people expect before coming back down to Tuesday's idea. So this is the same as the S&P, just the futures version. So we could come back a little bit higher, maybe gap up, I don't know. People think, or you could come down a little bit and then come up and then head down here. That would coincide with this gap over here. You do have a gap here, so this gap could be reclaimed, I don't know. And that's how our quick analysis. We'll come back and see if this fills out our future vision or not. We will keep you updated. This is our third stream in 24 hours, so we are a bit frazzled, but it's fun nonetheless. I love it. It's fun to share your thoughts with others and see it come to fruition. That dump this morning was pretty cool. Hopefully there's more stuff like that in the future. So we'll see as we go forward in time, and we thank you for your time. So let's see. So once again, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, and I kept it short but sweet, and you had 30 minutes for the open, so please enjoy and stay fresh, and peace.